Hey, good morning, everybody. Welcome to another day of the Market Report brought to you by Mike Bjork. Today is Friday, October 25th. I hope you guys have good plans for the weekend here. We got a couple of economic news releases scheduled for today, and we're going to jump into the durable goods orders for the month of September. So we got 0.2% growth last month, in August, and the forecast for the month of September was 3%, and it actually exceeded that, 3.7. Now, a lot of that is including the big ticket items, and Boeing had a nice little run there with a bunch of jetliners, so that kind of helped bring up those numbers. Now, if we strip out the big ticket items like autos and large ticket items like even airlines and stuff, we have this one exclusions. We had a negative back in August, and the forecast was supposed to grow to about 0.5%, and still negative. Now, obviously, this isn't great news when you factor that the Fed has been purchasing mortgage-backed securities at 85 billion per month, and we're getting stimulus from the government, and still we're getting a negative number here. So this is obviously not a great number to look at in terms of where the economy is going. Now, we also have the consumer sentiment where people are feeling about where things are at for this month of October. And with the government shutdown, we'll see how the people feel. So let's take a look here. We had a 75.2 earlier in the month, and the forecast for the final revision for October was 74.8. It came in much lower at 73.2. So people are not very happy with where things are at, and especially with this government shutdown. So it really kind of dampened the feelings or the moods out there of the people. Last but not least, we got the wholesale inventories for the month of August. So back in July, they had a 0.2% growth. People on the wholesale level were kind of stocking up, and actually came in at 0.5%. So August, if you factor, a lot of times they're kind of getting ready for planning, especially with the holiday season. So a lot of times they're kind of growing their inventories for hoping that the economy will grow. But not a bad number, but we'll have to kind of wait and see how that transpires for the rest of this year. It's not a huge number here, but it just kind of gives us kind of indication of where they think things will be later on. Now let's go ahead and take a look at the stock market. Again, this week, remember, there's stock market's up. A lot of earnings reports are coming out. It's a big week, and it's also wrapping up the third quarter. So they're getting numbers from the third quarter to see where things are at. Scratch that. So we'll look at the bond market here. Bond market's up. So remember, we had that we touched off the ceiling and dropped down, and now we're up. And we're currently up about 19 basis points, which translates to a little bit better pricing on our and the interest rate. So a little bit better pricing. We are touching the ceiling again. We'll have to kind of wait and see if we could break above that. So be prepared for some more volatility, but it's still kind of bringing us up in that upper trend line of upwards, which is improvement. So the higher the bond market goes up, keep in mind that the higher it goes up, the lower the rates come down. So obviously good for the bond market so far today. All right, folks, thanks for watching. I hope you guys have a great weekend. Stay tuned. We'll touch base again on Monday. Again, thanks for watching. Enjoy your weekend.